Over the past few weeks, Bitcoin's price has pumped hard, and you may think that comes from a new surge of interest or buyers rushing back into the market, but something else is going on. And I explained more about that, about what actually happened in a recent update for my newsletter subscribers. Here's a snippet from that update, and if you like this video, give it a thumbs up and share it with people you know. To get the full update, see the link in the description below. You may have gotten the impression that this pump came from a big surge of new buyers. And no doubt, some sideline capital did come in to chase the market higher, but most of the pump came from the Wall Street ETFs and MicroStrategy. Last week, MicroStrategy purchased over $2 billion worth of Bitcoin in 2 non-consecutive days, a little bit here, actually, in fact, too, back even further. But these are the ones that I'm talking about. On top of that, concurrent to that, the ETFs brought in $3 billion last week. It's a lot when you don't have a lot of sellers to counterbalance. There were no short squeezes, meaning traders who bet on the market going down, they had to buy back in when it went up. I mean, it's unremarkable. We did get this spike here. That spike is actually what contributed to the little pump up to $97,000. It wasn't the cause of last week's rally. You also didn't see any surge in exchange activity. Exchange activity is continuing going down, 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 down. This is the pump, the quote unquote pump, and it doesn't even register. You barely even see it. It's like just one oscillating line on a larger downtrend and not a very strong one. If you look at aggregate trading volume, it's still on a downtrend. Price is going up, but the volume, there's no volume. I mean, it's not going up on volume. It's just, you look, you get these sudden inflows, the market doesn't have a lot of sellers, and the price is going to go up, it's going to pump. Now, we know MicroStrategy is buying for the long haul, but we don't know how much of those ETF inflows come from people who are just playing the market. They're buying a short position in derivative markets to balance a long position in the spot market, or maybe some other way that they've structured positions using the ETF as one tool. In any event, ETF flows are very fickle. And if you look at what's going on right now, it's nice to see that we got this spike. It did break this trend, this downtrend that we had, but now it's going back down again on net. This averages out 7 days worth of flows, and it's going back down again. So look, if the inflows came from sources that showed consistency or intent to stick around, other than MicroStrategy, I think I would put a little more credence and a little more faith in the pump in this rally. But we haven't seen that, and now we're starting. We'll see. This may signal a shift in behavior and activity from people who use the Wall Street ETFs, but you can't say that yet. Right now, it's actually kind of. I mean, you could say this is just an anomaly. It's going down, nothing goes straight up or down, and we'll just continue going back here like this. I guess we'll have to see. We'll give it a few weeks. Econometrics had a really nice write up about the accumulation by public companies in the US, and the inflows are growing. They're growing more than they ever were before. They keep growing up. It's still only a handful of businesses. You still have the funds, right? The hedge funds, but it's just a handful of businesses. They're buying large amounts. By our standards, they're very large. I mean, look, 8 of them hold over 10,000 Bitcoins. 24 hold over 1,000 Bitcoin. It's certainly enough to pump the markets when demand is soft, kind of like what MicroStrategy and the ETFs did. Is it enough to change the trajectory of a $2 trillion asset? Probably not. At least not yet. So package that together with everything I told you about, the pumps align with large purchases and ETF flows. We do see more engagement by companies. Beyond that, larger wallets stagnating, longer term holders selling. That's why I think it's just one more sign that Bitcoin's fate in 2025 is a bet on the macro, right? It's a bet on the resilience, specifically with the US, but generally speaking, US based entities, rather than these narratives or crypto specific data and models and idiosyncrasies.